All right. Let's get started. Hello, everybody. Hello. Delay adds during an important like in 10 minutes. All right, just checking out some YouTube had a few updates and stuff, so I'm just making sure everything is going through all right. Just gonna give it a minute to let some people join. This webinar is going to be on supply and demand, how I use these zones, how I trade with these zones, and really just essentially how I use these zones to gauge market strength, market sentiment, how I create my pre-market plans with these zones, how I use broken zones. Like these zones, guys, you might think, oh, well, once they break, they're done for. Yes and no. These zones could also be used once they're broken. As many of the members know, I like to use these zones as areas of interest or areas of higher probability setups, really, especially if it was broken that same day. So again, I am just going to give it another couple minutes, probably just about another minute or so, let some people join in. If you guys don't mind, just drop a comment to make that way I can make sure that you guys can hear me. And this is going to be a fantastic webinar. I am excited about this one. It is a part 2 to the original supply and demand webinar. So definitely let me know. Here's good. Awesome. What's going on, Drone Cup? Hello. Alright, so basically, first things first, I just want to go over what supply and demand is. And basically what supply and demand is it's areas of interest, areas where buying exceeded selling pressure and we got a strong move because of that, or selling exceeded buying pressure and we got a strong sell-off because of that. So as we can see here, and I'll show you guys some examples to get started as well. So let's check out that 15-minute time frame. And what I look for in these zones is usually if I'm looking for a supply zone, I want it to be an inverse. So if I'm looking for a supply zone, I need to see some type of strong selling pressure, but I'm going to look where that selling pressure stemmed from, and that would be this area right here. And what I look for is I look for a inverse color, right? So if I'm looking for all these red candles, I want there to be a green basing candle, and that's going to be my supply zone. Whereas for demand, if I'm looking for a demand zone, like this one right here, see this really strong move, right? So it's almost like the price action whipsawed. It whipped straight up, had a really strong impulsive move. This is going to qualify as a demand zone. And that's how I find these zones. How I use them, however, is definitely a bit different, and it does vary depending on what kind of trader you are. Day trader, swing trader, all of the above. It does matter. So let me get into this. Let me just move that little face over there. And basically, so as we see, this is an example of a broken zone. So this was, I'm trying to bring us to that 9:30 open. So the market opened on this candle, and the market actually opened above this zone. But because I'm charting and trading on futures, the futures are open 23 hours a day. So the market is almost always moving on futures contracts, except for Friday evening around 5 p.m. they close, and then they open back up on, they close 5 p.m. They open Sunday evening at 6 p.m. Eastern. So the market's always moving. You see, if you guys look at the crosshair down here, it's 4 in the morning right now, it's 6 in the morning, 7 in the morning, so the market is moving. So there's always areas and ways to trade, even if we're not trading the regular New York Stock Exchange hours or the stock market hours themselves. However, what I like to do when I notice a zone is broken, I will not delete that zone until either a few days passes, but especially that first day that this zone was broken, I want to keep using that zone because that's still a zone that there were active sellers, or if this was a demand zone, it was the opposite, there would be active buyers. But because we're looking at the supply zone, there were a lot of active sellers here because what it did was it gave us a strong move lower. And whenever we get a strong move lower, we have to assume that there are unfilled orders in this area right over here. And there's also people with their stop losses either at the top of the zone or the bottom of the zone. So the market will like to do a quick little stop hunt. You see how we broke this zone and we actually came up to this key level that I had right here. And this was a key level that I had from the past. And it's always good to find our key levels when we are able to look back. When in doubt, zoom out. We want to look at the higher time frames. We want to really be able to verify that this was a key level or not. That's how I find my key levels. When it comes to zones, those are usually more updated. Those are usually closer. So let's see. We're looking at the hourly right now. What's going on, everybody? Welcome, welcome. Hello, hello. So as we see right here, we have our red basing candle, and afterwards we got a strong move higher. So what that's telling me from this point is there's a lot of unfilled buy orders right down in this area, and that's what makes these zones so strong, is those unfilled orders are sitting there waiting to be filled. So once price does come into this zone, there's a good chance the market will have a reaction to that. And when it has that reaction, we want to be in that trade. So when we're coming down to a demand zone, people who don't like trade supply and demand and are unaware of these zones, they might see the selling pressure and go, oh, well, I'm going to short down here. Meanwhile, there's a demand zone getting ready to hold us and push us higher. Somebody in the comments said, why do you keep the zones after they have been tested, no longer fresh? So that's a good question. I like to see it as if the demand zone was not broken, there's no reason, or demand or supply. If the zone wasn't broken, then it's still valid. There's still buyers sitting in that zone holding us up. I want to look for a good zone. So this was a 2 hour, and I have it right over here. So I'm going to check the 2 hour time frame. And we see we have our red basing candle, our green basing candle, long upper wick. Those are usually the higher probability zones when we have the long upper wick, because that shows that people are caught. They have a lot of buyers stuck in their trades, because you got to think at some point, this green candle with that long upper wick, this was a full body candle way up here, and people saw that as there's a lot of buyers coming in, there's a lot of buying pressure, I want to buy, buy, buy. Meanwhile, they didn't let the candle close, and what happened? We sold off after that. So there's a lot of sellers in this area, and there's a lot of people with their stops getting ready to stop out of this trade, and what that's going to do, and we notice that right here, is it's going to trigger those sell orders as soon as we come back and retest that zone. The stronger the zone, the stronger the reaction, and when we get a fast reaction like this, it normally means that that zone is very strong. What indicates a broken zone to me? So a broken zone would be just like this 15-minute right here. We broke out of it. So if it's a valid supply or demand zone, we're not going to break either above supply or below demand, because the buying pressure, the selling pressure, the unfilled orders are going to hold us higher or lower. Again, guys, if I say something like the zone will hold us higher, you got to remember it's inverse for supply and vice versa for demand. So again, we have this 2 hour zone. We retest it right here. We get a nice strong sell-off with some continuation. So this zone is still valid because there's still a bunch of unfilled sell orders in this area right up here. So a trade plan I might look out for this coming week is a short off this 438225 zone, because I'm also looking, and the last time we retested this zone was at 4 p.m., right? And then we had the 6 p.m. candle open and we pushed lower. So this was sort of right when market closed, and we could have swung traded some puts and that would have worked out pretty well. But I'm looking at this, I'm noticing that there's the selling pressure. It kept us lower before, and if we want to trade with the trend, we want to trade with repetitiveness, the market will normally give us something we could go off of. I want to take that again short at this area because this zone is still valid until it is broken. Another 2 hour zone we have is right here, small basing candle. And how I mark my zones, guys, is I mark it from the open of the candle. So that would be the open of a green candle is going to be the bottom, because it makes it a green candle, a buying candle, because it closes up here. The high is at the top wick, the low is at the bottom wick. So I like to mark it at the open, and I will usually do the rectangle to the top of the zone. And what do we get right here? We created a new 2 hour supply zone after we rejected the previous 2 hour supply zone. So a lot of times, and guys, in this little webinar, I'm gonna be giving you guys a lot a lot of really good gold nuggets. I might even turn this webinar off to the public and just keep it for our members, because a lot of this stuff took me a lot of time to learn with experience, to learn with trial and error. And I'm really just trying to give you guys the best so you guys could succeed too. So again, we had this 2-hour supply zone, and look how strong this sell-off candle was right here. Was this the strongest zone? I'm going to go with no, because it didn't have continuation. It had one sell-off candle, which was strong, but afterwards, it did not have the continuation lower. I still would have marked this as a supply zone. We did get the rejection, and we did push lower. Let's see if we have, now this zone right here, this was at some point, you see this blue area, this was an AOI, which I call an area of interest. This was at some point a supply or demand zone. Trying to look at what time frame that was on. It looks like it was either the 30 or the 45. Yeah, I believe it was the 30. Yeah, it looks like it was the 30-minute. And what made this a 30-minute is it was at the bottom of this downtrend. We had an engulfing candle afterwards, and then we had a pretty steady push up. It did chop around until we sold back off, but I kept this zone because even though we broke it right over here, we still had trouble breaking it. We still came into it, even on this wick right here, guys, on this candle. We came into it, we wicked right off the top, we started to push back higher, which means this demand zone started to work, but then it failed. And what we would do in this case is we would recognize that supply zones have been forming and demand zones have been failing. So instead of going long at demand, we would wait for us to reject demand, push higher, then we would short the failed rally. And that's a trade setup I look for often in our community. And I'll show you guys exactly what I'm talking about. So let's see. So I did want to go over, and I'll go over this momentarily. I like to create trade plans and a little bit of a technical analysis on ES and NQ every morning for our community. Make sure you guys check it out, bullishbears.com. Click join. You guys are always feel free to join. Really good stuff. We go live every day, me and Jeremy. It's really good stuff. So you see how we even came down. We had this one pullback candle, and then we continued. So again, this isn't an area where I would want to go long, even though it was a demand zone. It's an area where I would know the market would have trouble pushing through, and I would want to wait till the pullback comes to short the market. So if the market was selling off, let's see, this is the 930 candle. I like to start my trades at 930 when the US market opens. That way it brings more volatility and more volume. So we open on this candle, we wick around a little bit, we start selling off. I wouldn't have taken any trades here, but what I would have noted is, let's see, what day is this? September 27th? Let's see if I have the trade plan for this, guys. I want to see. I'm looking for us to hold key level, play it safe, break above AOI, retest. What is this? This is the 4312. So I'm going to pull this up, our trade plans, and let's see if I had this in the trade plans. Right, so I said if we start to break out of this AOI, AOI again, area of interest, I will look for a short entry near the top of the zone with the target of the 4295 and the 4286. So I said I wanted to short near the top of the zone, which is exactly what we got over here. And then I wanted to target some zones down here, which are broken already, so they aren't there. But it was 4295, which is right here, and that target was hit. And then the second target, and I'll show you guys too so you guys know it's legit. The date's right here, 9/28. And this is, oh no, this is 9/27. Let's see. 9/20. Yeah, 9/27. Ah, see. That the one day, you know. But let's see. So I usually go into a more in-depth trade analysis. NQ, I'd like to hold the 15-minute demand zone within the 6-hour demand zone. If we fail it, I want to take a short targeting 4-hour demand. Then I'll have 1 to 3, usually sometimes 4 setups that I'm looking for our community. That way you guys can also see and know exactly what I'm looking for when trading these zones. Because as much as I will do these callouts, I will do these trade plans for you guys, I want to teach you guys how to find these zones and how to trade yourselves. Because supply and demand isn't just buy at demand, sell at supply. We have to know, is the market making lower lows? Is the market making lower highs? And if it is, then we want to stay in that general direction. So if the market was making all of these lows, you see how we've been in a bit of a bear trend, then I'm not going to be buying at demand. I'm going to be waiting for failed rallies out of demand to short. So instead of buying at demand, I use the demand zones as areas of interest where buyers may step in, but I'm still expecting sellers to push us lower. So that's one way I use supply and demand. And let's see. So again, this could have been also a bit of a key level right there. Yeah, if we see how this key level, I found this key level from the other day, but if we look left, it worked as a key level on this candle where we had the sell-off, the pullback, and it worked right here where we rejected and pushed higher. The key levels, guys, are huge. When we're trading supply and demand, support and resistance is huge. To have that extra confirmation, to have those extra strong key levels, really helps push us in the right direction. So if we're just looking at this chart, we see that supply, we broke it. We had a nice liquidity grab up here, right? We got all these people who thought we were going higher. Meanwhile, we had this strong key level. It was support, we broke it was resistance, held up as support, chopped around it, and that's how I find these levels too, guys. I look for areas where we're either consolidating or areas where there's a clear rejection, where there's clear support or clear resistance, because those are the strong areas that even on the tape, if we were using the depth of market or Bookmap, we're going to see a lot of heavy buying or selling there, because the candles don't lie, the price action doesn't lie. When there's a lot of selling or buying pressure at a certain point, we're going to see it in the past as well. So a bit of a trade setup, and guys, this is what I was talking about earlier, how I said I'd drop a golden nugget or two. When I see us breaking a zone in the morning, but I see us coming to a key level, I'm going to want to short that key level, because I know that the market knows that there are people watching this area to short, but the market also knows that there's people watching this area to go long once we break it. So again, we broke this zone. A lot of people thought, oh, we broke this zone, we're going to go higher, 4382 is the next target. Meanwhile, we had this resistance level right above it, and what happened? All those people who just went long off of this break are now going to be chopped up, they're going to be swallowed up, they're going to hit their stop losses, and once they start hitting their stop losses, that's going to add fuel to the fire to the down move, and instead of being in the wrong trade here, we could be on the right side and really profit from that. And also, another reason why I don't delete the zones, I'll show you again, this is a 15-minute supply zone. We opened that day, right? We opened right at this key level, we came down, and you see how price respected this 15-minute supply zone, 436125, this key level. The top of supply and the bottom of supply work as key levels as well. We were ranging in it, and then we sold off. And then what happened? We got these two wicks right here. Now, these wicks would have been great areas to take our short positions because the market already presented itself as a short setup. I want to bring it to the 5 minutes so we could really see what's going on here. We had, look at that, we rejected this key level, was resistance, broke it for a little bit of a liquidity grab, resistance, another resistance. 3 times we rejected this key level. Now that we broke back under this broken supply zone, because it was broken this day, I'm using it as a good area of interest to go lower. Let's see, the Piper, what's going on, Piper? What determines where your zones are? So that's all based off of price action and price structure, really. So if I'm looking for a zone on a higher time frame, I'm looking for a 1 hour, a 2 hour, a daily zone. I am looking for, and guys, this is a great example of a daily that I did not mark out because I didn't think we'd come up that fast. But you see how we had this big drop, we had all these red candles, and then we had this green candle, but after this green candle, we had a strong move lower again. So this would be like a daily supply zone. I would take our rectangle tool, which is right under the brush category, take the rectangle, mark it from the open to the top to the high. That's how I would mark it for supply, and that would be my daily supply zone. So even though we broke the 15-minute, we had the daily supply zone there with the key level there, so we did have a lot of resistance at that point to tell us to go short. Whereas people saw this green candle, and as soon as the market opened way up here. So you have to imagine this red candle was a really strong green candle. So people were saying, oh, trade with the trend, you gotta trade with the trend, why are you shorting? Well, you gotta short when others are going long. You gotta go long when others are going short. Because we do have to remember, too, if 90% of retail traders fail, we have to trade against the grain. We have to know what they're doing, what they're looking for, and almost inverse it. Does that mean to always fight the trend? Absolutely not. The trend is our friend always, until proven otherwise, until the trend does have a full reversal. But it did not. We failed up here. We had a nice big green candle. Everybody trying to chase some long positions. Instead, you could have taken a nice short, and this would have given us a 55 points, almost 60 points in the day on ES. Guys, that's huge. Sometimes we get 10, 20 points, which is a great day. But 50 to 60, that's a great day. And to use these zones really gives us the upper hand because we're able to see where the selling pressure is, where the buying pressure is, because the market can't hide that. So with that being said, where was it? Somebody else asked, when do you identify your key levels? So key levels, I'll look for those based off of the higher time frame. Usually like to look for them on like the 2 hour and higher. Sometimes I will look for them on maybe like a 1 hour. But like this one right here was support. You see how we were ranging between this key level and this key level? So that's sort of how I find them, right? Because then look at that. We came back over here, and this is, let's see, this area is around August 8th. Came back up in here around August 30th. And what happened, we again used this area as a range. So we could find these key levels by just trading and looking at the history. And look at the key level, this bottom one. We look in the past, now this is back in July, this one's back in June. It worked as a ceiling for price. Price had trouble breaking above this key level. Each time it came to it, we rejected, we went lower. Up here, we had a tough time breaking above, rejected, went lower. Then as soon as we were able to break above it, we held it as support, 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 broke it again, used it as resistance. Then we came back up into it. Again, we ranged between those key levels. So even if you didn't use supply and demand, using these key levels is great as well. Support and resistance in itself is a fantastic trading strategy. You just have to know what time frame you're using to mark these levels and mark these zones. Ad will run shortly for some viewers. Guys, just so you know, I do have ads on for this video. If you do get one, just let it play out. I am going to do skip ads though. That way you guys don't get bombarded with them. Because I'm just that nice. What can I say? So let's take another quick look at supply and demand. Another ways I use it. So again, guys, if we're looking at the chart, we're looking at, say, a daily chart or something, and we see all this selling pressure here, the selling pressure here. Now, once we got this big engulfing candle, this is an engulfing candle. An engulfing candle is when price engulfs the previous candle, right? So the open was right at this open, but the close, the candle itself, was larger and almost ate. When you think of an engulfing candle, you got to think that candle ate the previous candle. Like it said, no, get over here, I'm going to eat you. So it ate this candle, and it pushed lower, giving us a lot of selling pressure. Once I saw that, most of my long position trade setups were off the table because that's a lot of selling pressure that, again, the market can't hide selling pressure. The market can't hide volume. Obviously, big institutions don't want to be telling us where to buy, where to sell. But again, they certainly can't hide the reactions that they cause. And that's what we look for with supply and demand. We look for the reactions in the market. where this sell-off happened and we got a big strong bounce right here. What that tells me is there's unfilled orders in this zone. So next time we come back down here, probably sometime this week, and you guys can come back to this video, I can almost guarantee it, unless we do want to reverse and go bullish, but I'm not sure about that. There are going to be unfilled buy orders here. Now, when we come back lower and we come back into this zone, people are going to be shorting it like crazy, but that does not change the unfilled orders and the liquidity in this area. And what that's going to do is it's going to give us a bit of a push higher. Now, are we going to reverse at this zone? Probably not. Bears have been too strong. However, we might get a pullback from this zone. See, that's how I really come up with my trade plans with supply and demand. I have to understand market structure. I have to know, okay, are we in a range? If we're in a range, then I'll happily sell at supply, buy at demand. Because that just means we're just going to be ranging in between these zones. Whereas if we're selling off and we're having strong selling pressure, I'm not going to be looking for demand to be buying at demand, to be going long at demand. I'm going to be looking for demand to give us a brief pullback, some type of move back higher, sometimes maybe even a move back to VWAP or something, and then I'll take the short off of that zone because I don't want to be going against the trend. The trend is our friend, and supply and demand just helps us find high probability areas that we could reverse or move back higher or move back lower. Let's see. If you guys got any questions, definitely leave it in the comments. Let me know. Let's check out the NASDAQ real quick. So the NASDAQ, actually, first thing I want to do is let you guys know that I'm working on, I just finished recording a divergence video for, not for the community, but more for our YouTube community as well. And it goes over how to use divergence to our favor. And this is actually some divergence right here, where we see that ES made this lower high, right? We made this lower high in supply, but NASDAQ, and again, we got to mark these off from the same candle, NASDAQ created a higher high. Now that's divergence, and what divergence shows us is there is going to be some type of shift in market structure, and this could have been one of our signs to go short. Not only did we get divergence, but we got divergence off of a supply zone. Look at this 30-minute on NASDAQ right here, guys. We wicked right into it, then rejected for a really strong move lower. This is a zone. I didn't mark this zone just now. I marked the zone off the 30-minute, and I marked that zone, let's see when. See, so this is a great example of a very valid supply zone. So you see how we had this area of consolidation. It was near this key level around 15,020 as well. And we had the consolidation. We had a strong move lower. We had a small body, long upper wick, and a strong move with the continuation. Earlier I mentioned how without continuation, it's sort of hard to mark it as a valid zone. This had that continuation. So we saw this zone, and what happened? Let's see. So this zone was broken. However, just like the broken zones before, like the one I was showing you guys on ES, we broke the zone, then later that day retested the zone to use as an area to short. But this 30-minute 15,057 is a little bit above this one, and you could see how we dropped. We had a drop, base drop, and look at this drop also gave us that continuation. We had 1, 2, 3, 4, 5, 6, 7 red candles. That's a strong continuation to the downside from this one green basing candle. So that's a strong zone. What happened? We rejected this zone. We pushed lower. And again, guys, this isn't a zone that I mapped out just now. This is a zone that I had mapped out and ready to trade. Now, some people might be thinking, oh, well, with supply and demand, you mark your zones and what, you have to wait so long for them to be tested? Yes and no. Sometimes, if we mark this zone, we could have got a retest on this day and it could have sold off. We could have got a retest on this. It all depends. It all varies. There's no set schedule to it. But the great thing about these zones is you could find them on multiple time frames. This one right here is the 2 hour. So let's check out the 2 hour. I'll show you what I saw there. 2 hour, again, we got the small green basing and a bit of a sell-off with some continuation, and we failed to come back. Oh, nope, that is the 4 hour. Where is, I thought I saw the 2 hour. Oh, it brought me way back. Way back. Here we go. Yeah, that's better. So check this out, guys. We had our green basing candle, long upper wick, small green body, and look at the sell-offs here. Now this sell-off tells me that there was tons of selling pressure, that it pushed the market lower. And that push lower leaves unfilled orders in this zone. So I'm still going to expect to short this zone right here. Now we shorted this supply zone, this 30-minute right here, and that was this day right here. Again, guys, check this out. This zone wicked it. We could have top ticked this, guys. Imagine selling at the top. Everybody's going buy, buy, buy. You gotta buy it. We're going back higher. Market's back green. Meanwhile, you know your supply zones. You know the market's been pushing lower. What happens? We saw divergence. We had these zones. We took it short, and we just sold off. And on NASDAQ, that would have given us guys, 230 point move. And again, that's in a single day. That's absurd. And guys, I make these trade plans. I send my zones out to our community every morning. New trade plans every morning, new setups, a little bit of a market analysis. And whenever people do ask for some type of equities, some types of stocks, definitely send over supply and demand on those as well. Supply and demand is great, especially if you trade ES and Q, SPY, QQQ, even large cap stocks like Apple, Microsoft, Amazon, Nvidia. Those work out well too because they have high volume in them. And you guys got any questions, please feel free to ask. Let's take a look at this 1 hour demand zone right here, show you guys how it worked. So this was a 1 hour demand zone. We saw we had a nice big pop right here with some continuation. So this 1 hour demand zone, look at this, we chopped back lower, and again, we could have bottom wicked this. This candle, the low of this candle was at 14,658, and this 1 hour demand zone started at 14,657, a single point away. Imagine that. That is something. Chicken Hawk, what's going on, man? How much do you trust supply and demand zones that were formed in the middle of the night when the volume's very low? So volume does play a big role in it, but it's more so the moves after the zone is created. So for instance, if I'm looking for a demand zone or a supply zone, let's see if I could find, I'm looking for like a bad example right now. When do you decide to delete zones? I'll get into that in just a moment. Let's see, like this one could have worked out as a 1 hour demand supply, because look at this wick right here, rejected it again. But let's just say, see, I'm trying to find a bad zone for an example, of course. Okay, so here's a good example of a bad example. We have our red basing candle, small body, long lower wick, and then we have a green candle, another green, a little bit of a red, and then another green. So, you could mark this as a demand zone. However, the move following this candle was not strong enough. I want a strong move. Now, this is at 345, right? So it does, but it doesn't matter the time that the zone is created. It just matters how strong the move was, because when we get that strong move, it's leaving unfilled orders. And it's those unfilled orders that creates the liquidity for us to reject or go back higher or go back lower. When do you decide to delete zones? So I'll delete zones once they either break or the day after they break. So as you guys saw on this 30-minute zone, we did sort of create also this head and shoulders, left shoulder, head, and right shoulder. But I'll usually delete it or keep it as an area of interest for a day or two just to see if we do react off that zone one more time. Gotta remember too, there is this key level there, but I'll usually delete the zones once the zones are broken. Like, look, we created a new 30-minute right here, also another 30-minute right here, so if anything, I'll delete this zone because it was broken. And I will create, so we'll come over to our horizontal array, and we're going to create that. And what's cool is you could save templates and pick them to be whatever you want. So I have D1 hour, 4 hour, 6 hour. This is all my demands. Then these are all my supplies. And when I click S30 minute, you'll see right over here, it's going to automatically plot 30 minute on it. That way I don't have to go into settings each time, go to text, type 30 minute. It's already preset for me. So I have the 30 minute saved, come over to my rectangle tool, and I go from the candle open to the candle high, and now I have a new 30-minute supply zone. So again, we're creating new supplies. We're not really creating new demand zones. What that's telling me is market structure is more bearish than bullish, and I want to stay with the trend. I want to know what the market structure is so I don't counter trend trade. So now I have all these zones where I consider going short. Would probably see this zone as a stronger zone than this one due to the fact that there is a trend line here and there's most likely a lot of buyers stuck in the market right up here as well. Now if we break it down to the 5 minute, we could really see, look at this buying pressure, but we created lower highs coming down. So all these people that kept trying to buy in this zone now got trapped. So all those people that are trapped are trying to exit their position. All the people that wanted to go short but didn't get filled because the market moved too fast on this drop, they have their sell orders still sitting there. And it's those orders that tell me there's a lot of liquidity here. There's going to be some type of reaction. Is that long tail with a very small body, inside candle? Which one are you talking about? Hanny? Sorry if I pronounced that wrong. Like, let's see. Like, you guys see this area of interest down here? I'm just waiting for Hanny to explain their question. So you see, this was an area of interest, and I find my AOI's area of interest based off of supply and demand zones. Just trying to find this one right now. So this was a 15-minute demand zone, and it worked once. It gave us a bit of a push. Then right here, it gave us a failed rally because we ended up dropping. We based, and then we dropped again. So then I kept this zone because I wanted to see how the market would react to it. So we pushed lower, and instead of using it as, you see, it was support here, it was support here. We broke it. Now it's resistance, 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 all this resistance. Now we're back above it, and it's support again. So that tells me this is a really, really strong area that if we're above it, we're going to use it as support. If we're below it, we're going to use it as resistance. So it's an area of interest with higher probability for the market to reverse. So if people are going short into this zone, I want to be going long with my stop loss at the bottom, thinking that we're going to use it as support. Or on the other hand, if we break below this zone, instead of shorting right at the break, I'm going to wait for us to close below, retest it, and short the retest. 10:30, it's a bull candle. What time frame was I just on? 10:30. Let's see. 10:30. Yeah, that's exactly this candle. That's exactly right. So basically, there's a few things that make a zone a zone. We want, if we're looking at supply, we want a green candle, small body. Normally, I want a longer upper wick than a lower wick because what that wick tells me is there are buyers stuck in the market, because we have to remember this wick at some point was a full candle. So all those people who thought the market's green here, look at these rallies, this is just a pullback, we're gonna go higher, they're stuck here. They didn't short over here. They kept going long over here. Then the market rejected and pushed lower. They're in a losing trade. They're trying to stop out. What about the 130? Let's see. This 130 was just a big drop candle. If anything, you see how this candle right here has a long upper wick, tiny body, but after that we did come into this area of interest and we ended up bouncing from there. Yeah, so this would not qualify as a supply zone because what we need is a strong move afterwards, and that strong move afterwards is the selling pressure or the buying pressure, depending if it's supply or demand. Today we're mainly going over supply zones because lately the market has been selling off more than it's been pumping back higher, right? So we usually hear the term buy the dip. Well, lately the market's been selling off, so we need to short the rip, right? So we really want to be trading with the trend. We got to be knowing what's up, what's going on, and just trade it properly. So like if we had these areas, we have a Fibonacci key level here as well. This Fibonacci is from a year to date. That's from the bottom of our big. So if we look at year to date on ES Nasdaq, I'll show you guys. We had, this is December. This is the first day of January. And this is the low, and then this is the high. We are still technically in a bullish market year to date, right? Because we're still up. If we take our measurement tool and we go from the bottom to the top, we were up about, that says 47%. That's pretty crazy on the NASDAQ. Now, however, we pulled back. Now, where we are right now, we are still up about 30% on the NASDAQ. That is something, guys. 37%. That is huge, huge. Whereas last year, if we're looking at last year, take the measurement tool. Let's see, first day of January was right here. Look at that, first day of January, and we just started to sell off like crazy. We got a strong drop up until the next year, and that was about a 34% drop. So the market really did try to come back, but it failed, right? So we had a 34% drop last year on NASDAQ. What happened this year, we had a nice reversal. Bulls took control. We do have to know what the trend is year to date, so we don't get too lost in the whole bear trend. Bears are back. We want to know exactly what we're doing recently, exactly what we're doing in the past month, past week, past 3 months, past year. We want to know that trend so we don't get stuck with a bias, and that bias could keep us in the wrong direction. We want to always be able to switch our bias like that. We want to be quick. We want to be, okay, if I'm wrong with the bullish bias and I'm looking at a lot of bear pressure lately, well then I'm really going to be more key on switching my bias and going bearish. Yeah, the part of that was projected upward. Yeah, exactly. So like, let's see. So you guys see this area of interest was really valid, very strong. Support, resistance, support. So coming up Monday, which is in 2 days, one of my trade plans for our community is going to be, I'm looking at this 14,800 key area of interest, and I'm going to want to go long as we could hold it. And then another trade setup I'm going to look for is if we break this zone, I'm going to look for the retest, and then I'm going to want to go short on the retest. Now, this 4-hour zone we see right here, it was previously broken. Now, normally when we break a zone, I want to delete it. However, we broke it just twice on this 30-minute chart. If we look at the 15-minute chart too, it was just broken a couple times, and we ended up wicking, we ended up pushing higher. So, I hate moving that. There we go. So, although it is still a demand zone, it was still broken, it was still ran through, we still drew a lot of liquidity from it. So, instead of going long at the top of this zone, I might look for a break below, and I might short the top, this 14,731 level. I might short near here and target the next 1-hour zone for about, let's see, about a 70-point drop. Now, guys, this is really great stuff. I usually only want to give this out to our community, but I figured let me do another webinar. Usually we were doing weekly webinars until I switched it over to weekly watch lists, but I got a few recommendations and questions about webinars and supply and demand, so I figured I would cover it one more time. Guys, don't forget, hit that like button. I do appreciate it, because I am giving you guys a lot of good tips and tricks. I mean, I've been trading about 3.5 years now, successfully trading a bit over 1.5 years, I'd say. And this is stuff that I've learned from trial and error, from going over YouTube videos, going over any type of books and stuff. And I'm giving it all to you guys because I want to see you guys succeed as well. And again, we give all this information away in the Discord community. I go live Monday, Wednesday, Friday to our community when I can. If I can't, we do have Bullish Bears Jeremy in there as well, who's also fantastic. He scalps a bit more than I do. Usually I'm more of a day trader, but it's still fantastic stuff, guys. Really good stuff. So like my trade setups for this coming Monday, I might look for a few, right? So I'm going to look for a long position right here, from here to here, target that Fibonacci, and it looks like that's already almost a, let's see, that's about a 2.8 to 1 risk to reward. If I wanted to go for the supply zone, that's a 3 to 1. And if I wanted, now that would be trade setup number 1. Now, if I'm looking for trade setup number 2, I'm going to look for a short position right in this zone, stop loss at the high, and I'm going to target the area of interest. Again, that's almost a 5 to 1 risk to reward. So you'd be risking 100 to make 500, right? Or risking 100 to make 495, if we're being exact. Another setup I would look for, if we do break this zone, I would look for a short setup off of this zone. Again, stop loss would be at the highs. And also, gotta remember, if we're pushing into this zone, the deeper into the zone we go, with the zone still being valid, we're going to be able to move our risk to reward and have a cleaner risk to reward setup on that. So if I'm targeting this area of interest, or if there is a new demand zone formed down here, this would also give us a nice 5.5 to 1 risk to reward. How can I get more info on your services? So yeah, if you check out bullishbears.com, that's us. You just gotta hit the join button, and it'll ask you what you want to sign up for. We have monthly, yearly, and lifetime subscriptions. And what that gives you is it gives you access to all of our courses online, and it also gives you access to our Discord community, where again, guys, I go live Monday, Wednesday, Friday for everybody. So I'm live trading with you guys. I'm telling you guys when I'm entering my trades, when I'm exiting my trades. And it's really good. And on Tuesday, Thursdays, we have Bullish Bears Jeremy, who doesn't trade supply and demand like I do, but he has his own strategy. He uses the wolf waves. He uses scalping. He's really, really great at what he does too. It's a really good community full of like-minded traders just trying to get better. I even created for our community a journaling page. And see, this member, Dakota, or Thomas is his name. What's going on, Thomas, if you're in here? He printed out the Bullish Bears Trading Journal that I created for everybody. And as you guys could see, it has trade information, risk management, trade analysis and outcome, and trade review and lessons learned. And I always stress to our members, it's so important to be able to journal our trades so we could see exactly what's going on. We could see, okay, it looks like lately I've been selling at supply, but supply has been breaking. Maybe I'm not going to sell at supply for a while. Maybe that's not the right move. Or buying at demand. Demand has been breaking. Maybe that's not the right move. Or if you guys use moving averages, something like that. What journaling does for us is it gives us the ability to see what has consistently been working for us and what has been consistently working against us. So we could get rid of the things that aren't working and continue doing the things that are working. Sorry about that. Just got a little YouTube notification again about the ads. Gonna skip that again for you guys. Don't feel like doing that to y'all. So an example of a trade setup from a broken zone is something that I might look for is if we break above this 30-minute demand and we have ES is strong too, I might look to take the retest. So long position. So if we break above, let's see, where is the path tool? There it is. So let's say market opens, we get a strong move higher, we break this zone, and then we start to come back. I might take a long position in this zone and target this key level trend line right here. So I'll show you exactly how that would look risk to reward wise. Probably like a 2 to 1, maybe not even. Yeah, about a 2 to 1 risk to reward would be a smaller trade. Tight stop loss on that. I'm fine with support and resistance, but supply and demand I don't see. Okay, so you're on during trading. Yeah, I'm always on during trading sessions. If I'm not on, and if I'm not on during the trading session, like if it's a Tuesday or Thursday, or if by chance I can't come on that day, Jeremy covers the live streams, but I still always, every single day, make sure to post some type of trading watch list, some type of pre-market plan that you guys could also trade off of. Let's see. So yeah, supply and demand is a great, again, adding to support and resistance, supply and demand is a fantastic strategy because it really helps you to know is the selling pressure, where is the buying pressure, and what creates these zones is that we had all these buyers stuck and we had the selling pressure pushed us lower with strength. And it's that push lower with strength that really validates the zone, because that push with strength is a mass amount of volume coming into the market. So that not only solidifies the zone, but it gives us a strong move, which we could always trade and scalp. But it also gives us an area of interest where the next time we come up to this zone, I could look to short. So there's that and that. If you guys got any follow-up questions, definitely let me know. I'll probably wrap this up in just a couple of minutes. Make sure you hit that like and subscribe button. I am dropping a divergence video on Monday. I want to see, I feel like there was divergence oh yeah, I pointed that out earlier, guys. There was divergence this day from ES and NASDAQ. Now, mainly when we're streaming, we stream futures, ES, NASDAQ, VIX. But if people are interested in seeing equities, I personally always have my equity chart up on another screen. You guys can probably even see it here. Yeah, so I always like to know what equities are doing, because if Apple and Microsoft are pushing strong, then I'm going to want to be strong on the NASDAQ, because those are heavy names. So a rapid move between levels is what you're saying creates a zone? Yeah, so it's that strong move, that it's like an impulse move. That impulse move leaves unfilled sell orders if it's a supply zone, because we're moving so fast from that zone. And not only are we leaving those unfilled sell orders, but it was that mass amount of volume that hit that was able to give us a strong move. So it's almost like a 2-for-1. You got to think of it two different ways. One, the strong move leaves unfilled orders, but two, there were so many filled orders, so many short positions in that zone, that we ended up getting a fast move from it. So again, it's a two for price of one type deal. We got a strong move because of it, but we also got the unfilled orders. So not only were we able to, if we were trading on the 30-minute and you see some type of candle like this is a shooting star pattern, or an inverse hammer, whatever you want to call it, we could have entered our short position. Let's see, we could have entered our short position once this candle broke below the open of this candle, put our stop loss at the high, and we could have targeted maybe this Fibonacci, or we could even targeted this area of interest, because this was the next valid zone we had, or even maybe this zone right here, and that gives us a 2-to-1 risk to reward. The area of interest gives us a over 3-to-1 risk to reward, and those are really nice trades that we could take, and take with ease, right? We don't want to stress when we're trading. I'll tell you guys what, when I'm trading, I'm in Zen mode. I am not stressing. I am cool, calm, collective. Just got to stay cool with it, because when we're cool with it, we're not trading with our nerves. Is the fast sell-off also visible in time and sale? Yeah. So time and sales is also a big one. I know a lot of people use supply and demand. Will also use extra tools like Bookmap. I know some people even use the footprint chart, which is very in-depth. Time and sales is good. Level 2 is also good, except with level 2, they're able to spoof some orders. So it really depends on, your experience, some trial and error, if you trust these extra tools, if you need these extra tools. Me personally, I just use the price action, but I will use equities as well. Equities are my favorite. VIX is my favorite. These are confirmations for me to know what kind of trend we're in. If the VIX is pushing down lower, while NASDAQ is pushing higher, and ES is pushing higher, well, then that's going to continue. If I'm making a new low of day on NASDAQ, and VIX and ES is making a new low of day, but VIX is not making a new high of day, then I know that there is a good chance we might reverse from that zone, because usually VIX will have to make a high a day while ES is making a low of day. And ES would have to make a high a day while VIX is making a low of day, because the VIX goes inverse of the price action we see on the S&P. Alright guys, any other questions, drop it below. Don't forget, hit that like button, I do appreciate it. isn't it you should look at the VNX? Yeah, exactly. So some people use the VNX when trading NASDAQ. Me personally, I like to know the structure of ES a bit more than NASDAQ structure. Even though, yes, you are correct that VNX is a bit more accurate to read NASDAQ's stocks and internals, but I like VIX. Over the few years I've been trading, I like VIX a lot more. How would I join in on your Discord? So you'd have to become a member. You're going to go to bullishbears.com. You're going to click the join button. Could probably even pull that up for you guys. Let's see. Bullish Bears. So yeah, you're going to look up Bullish Bears Education. You're going to click join. And you could click monthly, annual, or lifetime. And we do trade rooms, live streams, you get our Discord community, some watch lists. Again, if I'm not streaming that day, you could definitely see my daily trade plans because I post these every single day. Streaming or not, I make sure that I post these so that our members, our community, is ready for the day. Even if I'm not there, they're ready for the day because they have look at this. If you see weakness at this key level, I will look to go short with a 5-point stop loss. Now let's see how well that one played out. Just want to see one last quick one. Is that the 4-3? Yeah, so guys, look at this. This was, what day is this? Yesterday, and this is that day. I said, if we see weakness at 4-3-6-9-50, I will look to go short with a 5-point stop loss. Target is VWAP. And what happened? We got a strong move. And we got to move through VWAP, right? So we could have top ticked this. If I had a 5-point stop, the stop loss wouldn't be up until here. We wouldn't have been stopped out. And this would have been a really fantastic trade, all to see what was going on. Do you watch the 1 minute ever to understand what's going on during the... No, so I never... It's funny. Some people do use the 1 minute to sort of see the inside of a 5 minute. Me personally, I'd much rather be patient on the 5 minute and let that candle close so I know what's going on. So like if we're looking at the 5 minute on ES right here, and I see the strong engulfing candle, I might want to scalp this next candle to target this key level, and look how we rejected that key level. But if I'm not in this trade yet and we're just marching higher, I can't go long here because then where am I placing my stop loss? You have to ask yourself, where would I stop out? If I'm getting long there, and I'll get to your question in just a minute, the Piper. If I'm getting long right here, I have to put my stop loss at either the bottom of this candle that we're currently on or the bottom of that previous range, which this, and if I'm targeting this key level, this isn't even a 1-to-1 risk to reward. This is a trade I wouldn't tell anybody to take. No way, no way. Is watching live part of the paid plan? Yeah, watching live is part of the paid plan. You do have to be a member of our community to get in on our Discord, which is where we have our live streams. But we do offer a lot more lately. We've been getting more into like creating indicators and stuff for you guys. Like pretty cool ones. Let me see if I could show you guys one quick one for an example. Where did that go? There it is. So I'll show you guys, like I was mentioning before, I like to watch my equities. So on Thinkorswim, I have this indicator that tells me what has momentum, what has a trend, and how strong is that momentum and trend. So we have all these types of cool indicators and stuff. Let's see, TOS workbook, that's where we keep all of it. And members, if you guys are watching too, ask for this and our buddy Signet will send it to you. But it's just a ton of different indicators, different information, what candles do what, how to create candlestick pattern on Thinkorswim. Bunch of great stuff. We offer a lot in our community. Let's see. Some people say that even the 5-minute chart is too noisy. They look at the 10-minute. Yeah, I mean, listen, definitely. It really does depend on what works for you. If you're trading the 15-minute, you got to think too, the higher the time frame you're looking for, you're waiting for that proper confirmation, the better off the trade will be. Like me personally, if I'm trading the 5-minute, I'm usually looking at the 15-minute as well. So if I'm trading the 5 and I'm waiting for some type of candle to close, let's see. So if I'm waiting for this, would be a hanging man candle. That's when we have a small body on top, long lower wick. Usually we get a sell-off from there. And this was the hanging man at a trend line. We sold off, would have been able to enter the short entry somewhere up here, stop loss at the highs, and even though we pulled back here, it wouldn't have stopped us out. Now at that point, let's see if I can mark that off real quick. At that candle, so if I'm looking at the 15-minute and got in right up here, I'm looking at the 15-minute, still have my stop loss at the highs, or I could even have my stop loss at these highs, and I'm really able to ride the trend, because the higher the time frame, the better. Yeah, I use 3-minute. What would you use with? Yeah, 3 minutes always good. So what I would recommend, guys, is use whatever seems to work best for you. Not every trader will have the same exact trading strategy, but that doesn't mean every strategy doesn't work. I know people that just use the Fibonacci and they're doing great. I know people that just use supply and demand that are doing great. People that only trade on the 15-minute and higher are doing great. Bullish Bears Jeremy will sometimes trade off of the second chart. Seconds, guys. 5, 10, 15 seconds, 30 seconds. You know, you want to talk about price movement, that's pretty crazy. But listen, if it works for him, there's nothing wrong with that, right? If you find something that suits you, that fits your trading style, that fits your personality, then take it and run. And guys, I want to point out too, we had this trend line, this key level on ES. We also had this key level on NASDAQ. So when I am looking at ES and NASDAQ and trading one of the pair, when I see something line up like this, that gives me a higher probability that both of them are at some type of resistance. There's a good chance we're going to reject. Hanny had one quick last question. Guys, also drop any last questions you might have. I am going to wrap it up in a couple minutes. I know I said that before. You have trade ideas already? Yeah, so we have trade ideas. That's something else we post every morning. I'll show you right here. Watch list September 29th. We post trade ideas, top gappers. Post all of these. We also have Bullish Bears Angel. Will post some swing trade setups for us as well. So it's really a good community with a lot of great educators, a lot of good setups. And quite frankly, what I notice a lot of times when people are joining is they'll tell me like, hey, listen, I joined you guys and I ended up making back whatever it was to join. Like if it's, I think it's $70 a month, I made back that $100 on my first trade being here. So boom, you already made back your investment. And something else I like to tell people is you have to invest in yourself. You have to invest in your education. Because once you do, you will see growth in your trading. Did I favorite that? No, I didn't. But yeah, so that's about it. For our scanners and stuff, that sort of does fall under the TOS workbook. I'm pretty sure SIG has some scanners in here too. Let's see, like look at all of the stuff. Price indicators, market internals, general, options, expected moves. SIG's expected moves, guys, is crazy. This guy is awesome. Everybody in here has really got good stuff to give, good knowledge to share. It's really a great community to be part of. I even started off here as a beginner about 4 years ago when I started trading. So it's crazy. It's really a good community to be in. It's a good surrounding. It's a good area. It's very we're people oriented. I've heard a lot of bad things about other communities, how, you know, some of the moderators were a little harsh. None of that here. We want a smooth sailing, happy relationship with our members. We want to see you guys succeed as badly as you want to succeed. All right, guys. Don't forget, hit that like button, hit that subscribe button. Keep an eye out. I will be dropping that divergence strategy video on Monday around 5 p.m., I believe. So make sure you guys check that out. Appreciate you all for tuning in. Have a fantastic day. Have a great rest of the weekend. I'll see you all soon. Take care. Peace.